This presentation will take us into an evolving world of multi-asset trading, exploring how regular brokers and DeFi providers are working together to build safer, smarter, and more connected markets across Asia. It's a fitting finale, a look at how cooperation, compliance, and creativity will shape the next chapter of finance. Please join me in welcoming our speaker, Piers Tam, external brand representative, Mega Fusion Group, to take us through this. The floor is all yours.
Thank you. Good afternoon, everyone. I'm Piers Tam, the external brand ambassadors of Mega Fusion Groups. It's an honor for me to speak here in the FX Expo in Hong Kong. Today, I want to explore questions. Can traditional finance and decentralized finance truly coexist and thrive together? At Mega Fusion Group, the answer is yes. But the coexistence doesn't happen by accident. It is required balance, true trust, and the right directions of integration. Because progress in finance isn't just about speed and technologies. It's all about combined innovations of securities, assets of accountabilities, and opportunity with protections. The balance between traditional finance structure and DeFi creativities, it will define the next chapters of financial market, especially here in Asia. Let's take a step back. The financial market today feels like two worlds is slowly moving together. On one world, we have traditional finance, institutions, brokers, and exchange that have supported the global economy for generations. This system is built on stability, regulation, and trust. Investors know who they are dealing with, what their assets sit, and they can rely on clear resources and reportings. On the other, we have decentralized finance, DeFi, a system with permissionless, open 24/7, borderless, and incredibly efficient. It has unlocked the entry new way to trade, lend, and store value with blockchains and smart contracts. But each world has its own blind spot. Traditional finance can be rigid and exclusive, limited to geography and intermediary. Decentralized finance are volatile and fragmented, and often lack of recognized regulatory structures. Nowadays, nowhere is pushing towards convergence stronger than in Asia. In Hong Kong, regulators are building robust licensing regimes for virtual asset service provider. In Singapore, the monetary authority is experimenting tokenized deposit and on-chain liquidity pilot. And in Japan, lawmakers are defining how tokenized securities can coexist with traditional one. So we are seeing regional not just reacting to the global change but leading it. The question is, now isn't if traditional finance and DeFi will converge. It's how we design that the convergence in a way which is safe, sustainable, and scalable. When we look at this side by side, it's easy to see why collaboration is inevitable. Traditional finance provides pillars like licensing, investor protections, and clear oversight. For DeFi, decentralized finance provide regimes, engines, rare innovations, composability, and access to new form of liquidity. The two are not opposite, they are complementary. For example, imagine a retail investor. He wants to deposit USDT in his trading account to trade euro dollar in a licensed platform. They want to see the transactions is settled on chain within seconds. Or a wealth management Wealth managers tokenize our bond portfolios and offer fractional assets with financial regulatory compliance. This is not science frictions. This is already happens in a pilot form. This is new financial frontiers where the trust of traditional finance meet the innovation of decentralized finance. Why Asia take the lead, not New York and London? There are 4 powerful reasons. The first one, Asia is home of some world's deepest multi-asset market. FX volume in Tokyo and Hong Kong and rival of London and New York. Retail participation in derivative and CFD is massive across Southeast Asia. This creates a natural foundations of experimentation with new assets like tokenized instruments. Second, we have forward-thinking regulators. Rather than seeing crypto as a threat, markets like Hong Kong and Singapore are building structural frameworks. They are defining what is permissible, licensing exchange, and inviting institutions into conversation. This kind of regulatory clarity is a magnet of capitals. Third, institutional adoption is rising fast. Major banks are launching digital asset custodian service, asset managers are tokenized fund, central banks are pilot cross-border digital currency project like mBridge, linking Hong Kong, Thailand, the UAE, and China. And finally, Asian investors themselves are digital native. This is a region that mobile payment is faster than the West. The same digital-first mindset make the lead to tokenize assets for less intimidating. Together, these 3 forces position Asia not only the participant in the financial innovation, but the global testbed for the hybrid finance. Let's talk about the breachings traditional finance and DeFi look like in practice. At MegaFusion, we see 4 key pillars shaping successful hybrid models. The first one is the regulation and compliance. The first pillar, why is compliance? Because without it, nothing else stands. Decentralized finance projects often begin outside the regulatory perimeter, but to achieving mainstream adoptions, they must integrate with licensed brokers and exchange, and that can provide oversight and investor protections. We believe future slates are regular, accessible layers, a bridge that allows traders to interact with DeFi projects within a supervised environment. This ensures an transparency of blockchains doesn't come at the cost of investor safety. In a sense, regulated brokers aren't barrier, they are the gateway of trust. Second, integrated crypto and FX. The second pillar is integration between crypto and traditional products. Traders today want the flexibility to fund in cryptos, but want to trade the traditional asset like FX and CFD in the regulated platforms. To make the seamless platform make faster cross-asset settlements, pricing transparency, and custodian security. This means connecting the digital wallet, fiat gateway, and liquidity pool into one unified trading system. This is not just a technical challenge. This one creates a space that digital and traditional capital flow together without frictions. And when done, it offers a remarkable benefits: instant funding, lower costs, and broader access for clients around the world. The third one is the user experience. The third pillar is user experience, the area why many DeFi projects platforms struggles. For an average traders, self-custodian wallet, seed phrase, and gas fee are intimidating. Hybrid traders can bridge the gap by embedding blockchains under the hood, make it invisible but powerful. When a trader log into platforms, deposit fund, and execute a trade, They should see a familiar interface, intimidate, fast, complement, while blockchains quite handle the security transparency in the background. That's why how we make innovation accessible, not overwhelming. The fourth one is the liquidity and execution. The fourth one is liquidity because liquidity is the oxygen of every financial system. Without it, this means nothing. Decentralized finance has introduced novel liquidity models like automated market makers, on-chain pool, but they must evolve to match the depth and execution speed and reliability that institution traders demand. The real breakthrough will come from regulated liquidity networks, where on-chain settlement meet the off-chain execution quality. In these systems, traders are executed with milliseconds precise but settle on blockchain on full transparency. When the balance is achieved, we will see a new standard of trading performance, faster, safer, and more inclusive than ever before. Institution demand is clear signals that hybrid finance isn't just an idea, it's become an industry. Across Asia, we're seeing banks seeing exposure to tokenized treasury bills, asset managers using blockchain for fund administration, brokerage explore stablecoins settlement for FX trade. What drives this? Three things: efficiency, transparency, and control. Institutions want one platform that let them cross FX, commodities, indexes, and crypto without using multiple platforms. They want auditable data, real-time reporting, and a compliant-first infrastructure. They want to trade in our regulated environments, but want evolute trade as far as DeFi does. In our conversation with MegaFusion, we see a strong preference for hybrid brokerage partnerships, regulated brokerage, and collaborate with DeFi provider instead of compelling with them. So, what does the collaboration look like in actions? Let me share this example. Tokenized FX pairs. Imagine you are trading euro-dollars as tokenized instruments. You maintain the regulated structures of FX trading, but the efficiency of instant blockchain settlements and immediate proof of trade. Second, regulated liquidity pool. Pictures licensed brokers and institutions provide liquidity into on-chain pool. This pool will operate transparently and regulator able to monitor flow in real time, a far cry from opacity of traditional interbank market. The third one is blockchain-based settlement system. This is not only fasten the settlements, also free up the collateral and strengthen the stability of the financial system. There aren't concepts. They are already tested in pilot and all across Asia and Middle East. When traditional finance and DeFi collateral collaborate, they don't make market faster. They make the market fairer, safer, and more transparent. There's the real promise of convergence. A financial system built on not on competition, but on complementary. Now, we project 5 years ahead. What landscapes will look like? We believe the hybrid models will dominate. Trader won't ask whether a chain is on-chain or off-chain. They will simply expect the best of them. The speed, the transparency, and the access of DeFi combined with the stability and the governance of traditional finance. In the world, the concept of multi-asset trading will evolve. FX, commodity, and cryptos will sit side by side. Settlement will occur near instantly through blockchain technology. Reporting will be unified, continuous, and transparent. DeFi's strongest strength is efficiency. It will merge with traditional strength strongest strength, trust, to create a market infrastructure that is faster, cheaper, and more inclusive. And Asia will be the regions where the transformation become reality first, because the appetite, the regulations, and the innovation is already here. At MegaFusion Groups, we have witnessed the transformation firsthand. Founded in 2011, we have grown into a multinational, multi-regulated brokers groups, holding AFSL, FSP, and FSC license, serving traders and institutions around the world. Our philosophy has always been simple: secure your trade, create your wealth with confidence. This means combining innovation with discipline, ensure every technology labs we take is grounded with the same principles of integrity, compliance, and client protections that build modern finance. We are working with partners, regulators, technologies providers across Asia to build the next generations of hybrid trading system. Once the connected traditional liquidity with on-chain settlement and bring the efficiency without compromising safety. Because our belief is clear, trust is the ultimate currency, and the futures of finance must be preserved. Let me close with this thought. The futures of multi-asset trading in Asia is not a zero-sum game between old and the new one. It is collaborations between traditional finance foundation and DeFi's innovation. From traditional finance, we inherit stability, regulation, and global trust. From decentralized finance, we gain fast, creative, and inclusive. Together, we create an ecosystem where capital flows freely, market operate transparency, and every participant, from institution to individual, has greater access and control. Asia stands at the center of these transformations, and as MegaFusion continue to grow, our mission remains unchanged: to provide traders with a platform that is secure, innovative, and global connected, empower them to thrive in the new era of finance. Thank you, everyone.